Okay, we are going to pick up where we left off. Um, the other video, I accidentally stopped it, so we will just continue where we picked up, or where we left off. Um, okay, so going back to the data. So this is what we're looking at. We kind of mapped out potentials for a trade. We're kind of playing with scalping time frame, fib extension, right? Fib or fib retracement, more appropriately. And we're kind of asking ourselves, do we think this is a smart trade? Or do we think this is a smart trade, or this, or this, or this, or what have you, right? But I think just the idea of tying this in is powerful enough. And then I want to kind of give you my thoughts on it, right? So I think, just from what I can see, that we do have a pretty high likelihood of going to this next level, right? So what a person could do. We've already seen it breach, right? If there were a strict respect for this particular fib retracement level, that would not have breached. We'd already have pinged and been falling. That's just my personal way of seeing it. I don't think there's a right or a wrong answer, but my personal way of seeing it. Again, relative to a very strict respect. When there's a strict respect, that to me means that there was no breach of the line, right? The price action respected it almost to the T, right? To where you could not see this wick going over. All right, so that's that. The first thing I would ask myself when it comes to something like this is, how bullish do my entry time frames look? And you can look at them and you can see they don't really look that bullish, but we do have an orange movement monitor that just turned orange on the 12. It looks like on the 5-minute we do have an orange movement monitor, and the 24 is still red. So this could conceivably be a decent entry, right? We have some pretty strong resistance here. So if I was to clone this, if I were to copy it over, just for perspective's sake, to see where this would have to go, this would probably be the easiest way to look at it. So I have to ask myself over here on this 12-minute, is there a good chance that it doesn't go there based on what we know right now? I see, even in the 5-minute, I see expansion, but it's a dark dot, which means there could be limited expansion. So to me, this means that we have a decent chance, again, just a decent chance, that this is about where price action goes. Now, could that change? Of course, it could totally change. But could this be, where it stops? Yes. Do I want to enter my trade just yet? Probably not. I think there's clearly a bit of a loose respect for that fib line. And so could I be happy with about a 13 risk-reward ratio? Yes, I think I could. I could be happy with that risk-reward ratio. So these are, again, questions that I think you just kind of have to ask yourself as you decide what to do. So as we decide what to do, we can literally do kind of like the same thing on the real chart, right? So we can literally take this, and I want to make sure we're using the same time frame, which it looks like I could do the same thing on the 15-minute. But again, for the purpose of this exercise, we've used the data to determine what direction we believe it's going to go in, and then we're going to take this and kind of see, do we want to play this game with the data as is? And so I'm going to look at charts on another screen, same ones that we're looking at, but just so I can focus on this, I'm going to look, and I'm kind of like deciding on what would be an appropriate entry. So I can essentially, because it's the same chart, I can essentially draw in a bit of a cleaner form. I can draw similar data, right? Let's see, is it this one? Here it is. I can draw similar data. So I could say, do I think that I want to try to play this game? And we're already there, right? So my limit order, it's actually a great place to enter. If anyone ever were going to market order, this is the kind of place that would be the only acceptable place. But there's not really ever a need to market order. In a lot of cases, it really is kind of a FOMO move. Even when I do it, it costs a lot more, and if you know what you're doing, you don't have to pay that price. And if you are confident in what you're doing, then there's also no reason that you would have to rush that. So with what I'm seeing in the Bitcoin scalping timeframes, I'm kind of thinking like we have room to wait for it to go up. And so what I'd probably honestly do in this scenario is I think there's enough bullish data right now to where I wouldn't necessarily enter it, but I can show for somewhat of a case study what would happen. I think we've already seen the retrace, so I almost just might as well not have that in a video because we want to kind of make a video that builds the psychology of this is what to do to find success, not this is what happens when you FOMO. So I partially don't want to do it, but because we looked at it and because we saw just enough data, right? Let's go back. We saw just enough data in these charts here to know that we have a pretty decent shot of it working. What I'll probably do is just say, let's see what happens if we take a little bit of cash, right? Let's just take a little bit of money and we'll play this game just to see what happens. And we will, let's go ahead and throw it into a move. Right, not a bad spot. Again, I'm looking at the charts. I don't see any expansion monitor. I see movement monitors, so I'm going to make this a very low leverage trade because I don't have extreme confidence that it won't go higher. So I'm going to make it lower leverage, something like 5x, right? We'll confirm that. And with where we are right now, I'm just really going to wait for a little bit of signs of exhaustion on the current fib line, right? So if this is the fib line that I'm looking at, pretty much right where price action is, just want to see some of these time frames do a little something. And I can already see it on one, right? So I already kind of see it on the 5. It's tough if you have perspective of linear regression, it can cloud you. So sometimes it's okay to turn it off if you know the larger time frames you're committed to. I just saw another expansion monitor dot pop up here. So I'm going to go ahead and take a look at what we're working with. And I think what I'll do is I will limit order in right around the current price action because I like that it's right on a fib line, right? A fib retracement line. So we'll go 57, 676 point, whatever. I guess we don't even need a point, right? 57, 676. Well, let's go 71. Okay. So we'll try for this. This is about where we're at. We'll open our short. And there it is, right? So there's our short. Now let's see how close it is. If I really zoom in, actually I don't need to zoom in. I can just choose choose a time frame that's more appropriate. Okay, now I have the asymmetry calculator right on the line. We're kind of flirting with it, right? This is super close up, so we're kind of flirting with that line, and I want everybody to remember this one. Hold on, let me get this back. Okay, I want everyone to remember this one, but we're going to delete it for now because we want this to make sense. All right, so as we kind of just explore the idea of using a fib retracement line as a entry with a limit order and a position that will be, just something that we can watch and kind of be entertained by, knowing that this is not the most conservative one. It's only showing minimal signs of exhaustion. I want to get us in to kind of make this video, you know, flow a little more quickly. I have really no doubt that it will probably retrace and pick up my order, but when I'm trying to make a video, of course, that is the time that it maybe chooses not to. So let's help it along just a little bit, right? It's only 5x leverage, so if this position goes against me as I build this demo, you know, it's not going to be a huge deal. And I think my goal is to show that choosing the right direction, utilizing the DIIO data, utilizing the different CCM timeframes, the dot configurations, and ultimately finding, you know, some asymmetry that makes sense is a great way to find a less FOMO oriented entry where you can actually find more successes, right? So again, I don't mind the limit order. I'm just gonna try to get it. Oops, moved the wrong thing. I'm gonna try to get it to where it picks me up pretty quick. Should be pretty easy to get right here. And then we may watch it, you know, go against me for a minute, right? We have to kind of like play with that psychology also. So as you can see, the order is open right here. I'm just doing total of $5,000. So it's basically $1,000 poured into a short position with 5x leverage. On Bitcoin, because I'm pretty familiar with the volatility profile of Bitcoin, I feel like this is a pretty palatable place to enter. That's why I don't really consider it dangerous for me to FOMO in, so to speak. One thing I want to kind of point out is sometimes with limit orders, you can see they don't pick up the whole thing, right? So you go, wow, it's only moving, it's only moving like barely a penny. Well, it's because it has only picked up a small, tiny fraction of my position, right? It has not picked up my position yet. So we're going to kind of watch this, and this is the challenge with, you know, limit orders and making sure you understand what's going on. It is literally kind of like buying into my position a little at a time. Now, if we get a move, there's plenty of liquidity on this exchange. So as we get a move that's just a fraction of, you know, a move in my direction, we will start to see this fill out, right? So here we are at 1602. Total position value should be 5,000. Total margin should be 1,000, right? So that's how we know when the whole move has been picked up. We can see here the limit order is still getting picked up. Which means that it has had a little bit of down pressure and it just has not retraced back in my direction just yet. And so again, this whole demo is just for the purpose of kind of showing what it's like to plot, build, identify asymmetry, decide on you know, what you're looking to do as far as your trade, right? So the first thing I wanted to do is show another tool, another strategy to get into trades, finding asymmetry that's suitable, utilizing the asymmetry calculator, using something that a lot of traders use, which is fib retracement theory, knowing that it's possible that we're wrong and we retrace here. But in so many instances, we're right, at least for a while, right? At least to the degree we can protect our trade, right? So this is just kind of something to consider that you add to your arsenal. If I were a more conservative trader and I really believe down is the direction, then I have to go, okay, I want to be a little safer. So I'm going to do this same thing, same exact thing probably, only I would extend my take profit down to the pressure lines. But I would do the same thing, and I would do it at this fib level. And if I was extremely conservative, then I would do it at this level. But as you become more and more conservative, you have to remember that it's possible that you're wrong. And so the only danger is it doesn't go that high, right? The trend missed you, right? Like your entry was missed. And so that's the only danger with being too conservative, right? But notice how overall, I mean, granted, it did go a little over, but notice how overall well this fib retracement level was respected, right? It's kind of neat, you know, that we can do this sort of thing. And I'm able to show this to you on the exchange as well as on our charts as well, right? So kind of a cool thing that I wanted to make sure I introduce people to if they were not aware of it. And then you use this data, right? This data that is calculated by a computer, by the TradingView software for you. You use this data to make other decisions, right? So 1, is my asymmetry good enough? 13, yes, I like between 13 and 14, that's great. It may be too good. Usually if it's too good, the question is my stop loss too tight? But if you are using high leverage, you have to always remember to multiply this. So in this instance, if I were to set a stop loss, you have to kind of remember that that would essentially equate to 0.25 times 5, which is 1.25% of my capital at risk, which looks like it would be about $12 based on the multiplication there. And that's what I'd be looking at, right? That would be my asymmetrical trade. Is it good? Yes. Overall, I like it. Now, some of the things that we didn't really talk about for members that could find this beneficial, I'm going to share. I wanted to talk about identifying, you know, position sizes and just kind of making sure that the trades you enter are worth it. How to go about doing that sort of thing, right? So I would literally go here. I could come up. I like, which one is this? I like BingX. I mean, I guess I like all their interfaces. My least favorite when I go to sell out of a position, even with a limit order, is probably FEMX, but even FEMX is easy enough. I like BingX's, which is this exchange. I like BingX's format, right? It's not bad. So all I have to do is take a look at my take profit. My take profit, we had kind of mentioned, would be where did we say it would be? We said it would probably be about 56. We'll call it 56.50, right? So 56.050. So if that's the case, 56.050, we can see in this particular trade, you know, demo, that's $137. And my stop loss in this particular demo, what did we say? It was approximately 0.25. So that doesn't sound right. It does the math for you, so we have to kind of remember it's times 5, right? So really, I'm kind of looking at losing about $12. So I could confirm this, and then we kind of just, this is the set it and forget it version, right? So now I have my take profit. I lose $12 if I lose. I make $137 if I'm right. I walk away. I have dinner with the family. I go swimming. I do whatever I want. You know, you could do the same exact trade with more money. You could do it with less money. This is not my favorite fib line for a major move. So I kind of look at it as more of an aggressive entry. Like, I don't want to miss the move if it happens. And so I feel like this one for me would be less capital, less leverage. If I felt differently, I would, you know, definitely make a different decision. But this could happen, and at the same time, it's not one that I want to put 20 grand behind. Also, I don't think that would probably make sense for a demo, but I do want to do that one day. I think you know, showing larger scale trades, watch velocity of money happen at a faster level will be kind of fun as well. So as we kind of like look at this, we could see, you know, that retrace occurring, and we can kind of see what's going on. You can see what it looks like on some of these charts. You can see what it looks like on the 4-hour, among others. And so if we go look at it, if we want to replicate what we did, we would say the average open price was 57,635. So I need to adjust this to reality, right? 50, where is it? 57,635. I think it's right about there. Right. So now it's kind of like reality. And then we look at, what did we make the stop? We made the stop 57,779. And so I could go over here and I could ask, did I make the stop 779? Right about there. And so that's where it is. This 4 hours kind of showing you, the past 3 hours of price action. So if you want to watch real-time price action, what's happening now, since I opened the trade, you could watch something like this over here on the 5-minute, right? And so if I wanted to see if I can adjust this. Yeah, we do see it moving. So it takes a minute. You got to make sure you're messing with the right one, right? But if I wanted to make it kind of more accurate to the chart, I would do it something like that, right? So we could see, like, give or take when I entered this trade, and so that would be it, right? That's I think a great demo for how to use our data, how to use everything that we have with relatively choppy, frankly, indecisive overall ranging conditions, and still land really, really nice trades, right? And so that's, even though I kind of like adjusted my entry to make the demo work, we could see that, it still worked, right? And so magnify this trade as much as you want, depending on, how well you think it's going to do. But I wanted to give people an idea of what I think is a better way to find an entry, right? So this is one thing to look at. The other